Hello and welcome! Today we're diving into the pretty unique world of tax allowances in Scotland. If you live or work north of the border, you've probably noticed the rules can be quite different from the rest of the UK. And honestly, understanding them is absolutely key to managing your money.
Now, this whole discussion has been put together for you by the experts at Pro Tax Accountant. They specialize in helping people and businesses navigate these exact complexities. So with that, let's get right into it.
So, here's the big question, isn't it? If you live in Scotland, are you actually paying more or less tax? Well, the answer is it depends. Depending on how much you earn, you could be paying more, less, or, weirdly enough, even both at different times in your life. By the end of this, you'll know exactly where you stand. Okay, here's our roadmap. We'll start with why the systems are different in the first place. Then we'll get into the nitty-gritty of your income tax and property tax. After that, we'll cover some uniquely Scottish reliefs, and finally, we'll tie it all together to see what it really means for your wallet. Okay, first up, let's get to the foundation of all this. Why are we even having this conversation? Well, it all comes down to something called tax devolution. So, what that means is the Scottish Parliament at Holyrood gets to call the shots on certain taxes. The big ones are the income tax you pay on your salary and the tax on buying property. But, and this is important, other major taxes like national insurance and capital gains tax are reserved. That means they're still set by Westminster for the whole UK. And it's this split that creates some really interesting situations. Right, let's get to the one that probably affects you the most, month in, month out, your income tax. If you've ever had a peek at a Scottish payslip and compared it to one from England, you'll know the numbers don't always add up the same way. Okay, but before we dive into all the differences, let's talk about what's exactly the same. Everyone in the UK, no matter where you live, gets a personal allowance. That's the amount you can earn before you pay a single penny of income tax. For the 2025-26 tax year, it's $12,570. So on that first chunk of cash, we're all on a level playing field. And here is where it all changes. After that shared allowance, the systems just look totally different. The rest of the UK basically has three main tax bands. Scotland, we've got 6. You see, you start at a lower 19% starter rate, which is great, but look at how much narrower those bands are. You hit the 42% higher rate in Scotland when you earn just over £43,000. In the rest of the UK, that 40% higher rate doesn't even start until you're over $50,000. It's this more complex system that leads to some very specific outcomes for people.
And look, this isn't just theory. This comment from a Reddit discussion, it just hits the nail on the head, doesn't it? It perfectly captures that frustration some people feel about a weird quirk in the system, often called the Scottish tax trap, where for a certain slice of your income, the rate just skyrockets. Now, before we unpack that tax trap, we have got to be crystal clear on one term, marginal tax rate. It's not your average tax rate on everything you earn. No, it's the percentage of tax you pay on the next pound you earn. It's the rate that applies inside a specific band. So here's the problem. It's all about a mismatch. Remember how some taxes are Scottish and some are UK-wide? Well, in Scotland, you start paying that higher 42% income tax rate pretty early, at just over 43 grand. But the higher rate of UK-wide national insurance doesn't drop until you're earning over 50 grand. This creates a trap, a window of income where you're getting hit with both the higher Scottish income tax rate and the higher national insurance rate at the same time. So what does this actually mean in pounds and pence? Well, put it this way. Someone earning £50,000 a year in Scotland will pay £1,542 more in income tax over the year compared to someone on the exact same salary in England. That's a significant difference. Okay, let's switch gears from your income to another huge area where things are different, buying a house. When you buy property in Scotland, you're not paying stamp duty. You're paying the Scottish version called Land and Buildings Transaction Tax, or LBTT for short. And this is where a lot of buyers in Scotland actually catch a break. The point where you start paying property tax is £145,000, which is a full $20,000 higher than in the rest of the UK. And if you're a first-time buyer, it's even better. You pay nothing up to £175,000. That can mean some serious savings, especially if you're buying a starter home. But, and it's a big but, it's a completely different story if you're a property investor. The extra charge for buying a second home or a buy-to-let property in Scotland has recently jumped up to a massive 8%. That's on top of the regular property tax, making it way more expensive to own a second property. Okay, so we've talked income tax, we've talked property tax, but that is not the whole picture.
The Scottish system also has a bunch of unique reliefs and bits of support for both households and businesses that you won't find elsewhere.
And these can really make a huge difference. The council tax reduction scheme, for example, is often more generous here and can save some households hundreds of pounds. If you're an entrepreneur, the small business bonus could literally wipe out your business rates bill. And hey, remember that tax trap for higher earners we talked about? Well, pensions are your secret weapon against it. You get tax relief at your higher Scottish rate, which means the government effectively gives you back more for every single pound you save for your future.
So after all of that, what does this actually mean for you? When you add it all up, who's better off and who's worse off under the Scottish tax system? All right, let's break it down. Here's the bottom line. Because of that lower 19% starter rate, if you're earning under about $29,000 a year, you'll actually pay a little bit less income tax in Scotland. But the moment your salary starts climbing and crosses into those higher bands, you quickly end up paying significantly more.
Okay, so what should you actually do with all this info? Here's a quick checklist. First, grab your payslip and check your tax code. If you're a Scottish taxpayer, it should have an S at the start. Second, go online and use an official tax calculator to see exactly how these rules affect your specific salary. Third, especially if you're a higher earner, really look into maximizing your pension contributions. It's one of the most powerful tools you have. And finally, if this all feels a bit much, get some professional advice.
You know, this isn't just about numbers on a page. Understanding whether you're benefiting from that lower starter rate or getting caught by that higher rate trap, it lets you plan things better. Your savings, your investments, maybe even your salary negotiations. It really puts you back in the driver's seat.
And look, if you want some help putting that plan together, nothing beats professional advice. For personalized guidance that's tailored to your specific situation, you can reach out to the experts at Pro Tax Accountant. You can get them on WhatsApp or by phone at 079-8568-9912. Or just drop an email to info@protaxaccountant.co.uk. Thanks for joining me.